Hello, everyone. My name is Danling Jiang. I'm a professor of finance in the College of Business. I co-direct the bit of the blockchain business lab in the College of Business. So welcome to our workshop for new students of Stony Brook, blockchain crypto, and we're going to talk about the risk and opportunities in the space. So before I go to the content of the talk, I want to briefly introduce our lab to you. So if you Google Stony Brook University Blockchain Business Lab, you will find our website. And we work with faculty student teams and industry partners to do research and a business application of the blockchain technology. We have an application link. You can join, just Google. And in the lab, we have research awards available for students who have made contributions to the lab and the research. We also encourage everybody to follow us on LinkedIn. We are housed under the Center of Entrepreneurial Finance in the College of Business, and the center organizes student and faculty teams to work with entrepreneurs. Again, you can find the application tab to join the center, and please follow the center on LinkedIn. In addition, myself have worked with a bunch of student volunteers to start a Stony Finance Lab .org website. So we share information and resources on events and career opportunities regarding investing, blockchain, startup, small business, academic finance, etc. on the website. And all resources are free and constantly being updated. We have a YouTube and Bilibili channel, which feature something like what we do now, the workshop, live workshop, as well as student-made videos related to finance, investing, and blockchain. So we encourage you to subscribe to our YouTube or Bilibili channel. If you are here today, you probably have registered for the events. We will send you a free newsletter that have recommended articles, student-made videos, and jobs opportunities available every week. And if you like it, keep it. If you don't like it, you can unsubscribe it. If you have not registered, you got this link of the event from your friends. You can go on our website and register for the free newsletter. It's just a weekly newsletter. On our website, we have a blockchain crypto page, and under which we have resources for beginners and for more sophisticated individuals in the space. So we have a free crash course, which is the collection of resources for you to get to know what is blockchain, what is Bitcoin, and so on and so forth. Okay. Okay. I'll start with maybe like a 20 minutes presentation from myself, 10-minute presentation from Dr. Aaron Kim, who is a social professor of finance and does research on stablecoin. And we also have 3 students from our lab joining us to share their experiences, the opportunities they've seen in the space. And finally, we will open up the floor for your question through the chat box, then we will answer them. So let's start with blockchain technology. Many of you may have heard it or have known it, but some of you may be to the term, right? Blockchain technology is different from centralized ledgers, right? It's basically the chain of blocks that record transactions and databases. In the centralized ledger, and there's a single point that hosting the database, and every node, which can be individuals, we have to transact with the centralized point. However, in the blockchain, we have distributed and decentralized ledgers, which means that peer-to-peer transaction is feasible because every node can be a peer and can be also a host of the database. So we could have thousands, hundreds of thousands of the same database the same ledger replicated in the blockchain to secure the blockchain. So there is no single point of failure. Can be thought as a infrastructure, right? So let's go back to the early 90s. Initially, when internet was created, people used to think internet is just one new thing, right? Like radio, TV, and newspaper. But later we realized after 20, 30 years of development, internet becomes the infrastructure for everything, right? We can build a lot of things on the internet. So chains are also infrastructure. It's a different type and more advanced type of infrastructure. Under public blockchains, we can build currency. Then we have cryptocurrency. We can wrap equity. We can also have crypto commodity. If we make art into NFTs, non-fungible tokens, then we have crypto art NFT. So here I want to focus on three revolutions the public blockchain infrastructure can bring to us. I'm going to focus on the second one today due to the topic is about risk management, right? So the first revolution public blockchain brings is the money revolution. The representative user case is Bitcoin, which has been adopted by many, many individuals and has the widest users in the world, and also the highest market cap among all cryptocurrency. The second revolution is the financial revolution, which I'm going to detail in a second. We're going to talk about decentralized finance that has been taking place on the blockchains. And lastly, blockchain brings in the internet revolution. Here we could have a different way to structure firms and to structure the collaboration of work among the project teams and users. And that's called Web3. Okay, so today our focus is the second part, right? So I'm going to talk about the recent crypto market turmoil in 2020 that has happened over the past 3 to 5 months, right? And this is centered around decentralized finance, DeFi. So we're going to talk about CeFi and DeFi. We're going to talk about algorithm-based stablecoin and cyber attack to DeFi protocols, and finally the new development in the regulation and compliance space. I'll just give you an idea of how big is the magnitude of the market turmoil in 2020 in crypto space. So in 2021, November and early December, the entire global crypto market is worth about $3 trillion. That was the recent peak, okay, all-time high. And since then, over the last 8 to 9 months, actually 6 months about, we have lost over 2/3 of the market cap. So right now, the entire crypto market is worth about $1 trillion. So 2/3 of the market value has been wiped out. So this is essentially a huge market collapse. But that has been seen over several times in the past for cryptos because it's very new and so it has a lot of risk. Speaking of DeFi, I would like to bring up a little bit the background, right? Why decentralized finance, which brings investors the crypto yield, which is a lot higher than what you can earn from the bank, has experienced tremendous growth in the last 2-3 years. In part is because the Federal Reserve has lower interest rate during the COVID pandemic, which caused a very low yield environment, right? So people who have money couldn't find yield, they look for other ways to get yield. And during the last 2-3 years, many of the lenders, crypto lending platforms. It could be CeFi, centralized finance. It could be DeFi, decentralized finance. They were able to offer very attractive yields, anywhere from 2%, 4% to even 15 to 20% per year, right? And the value proposition of decentralized finance is very clear, right? Blockchains are permissionless. They are decentralized and open source. We can conduct peer-to-peer transaction without a financial intermediary. So it's a lot cheaper relative to we have to go through someone in the middle. And it doesn't require the trust of in the peers or in any financial intermediaries, because we have the protocol, the algorithm that guarantee the smart contract is going to work, right? So it's a fair and open environment. Anybody can join, and it has much higher financial inclusion relative to traditional banking and financial service world. And also it's 24/7. You can trade in decentralized finance world, which is on the internet, right? At any time, any day, and it's instant or nearly instant settlement. And it's censorship resistant because the government or any individual or party cannot shut down the protocol, because you could have hundreds of thousands of copies anywhere on the planet. Okay. However, starting from, I think, last year, we run into various problems with decentralized finance. Right? The starting point of the huge market turmoil really went back to May, when we have the Terra protocol demise. Okay, so what happened to Terra is a protocol that has two native tokens. One is the Luna token. The other is the Terra stablecoin, right, which is called UST token. And they use the algorithm to back the value of the one-to-one mapping of UST to US dollars, right? So when UST depags from US dollars drop below $1, the algorithm will automatically issue Luna token and to decrease the UST token in order to reverse the value, which will cause Luna token to be minted at a big amount, right? So ideally, when small depegging occurs for UST, the system could reverse its course and reverse the depeg. However, when the depeg is substantial and it triggers a bank run. So what happened is in May, that bank run was triggered and people were fleeing from UST, which caused unprecedented huge amount of Luna token minting, and also causing Luna token to devalue to zero, right? So over one day or several hours, you see that the UST drops from $1 to nearly $0, and the Luna token dropped from $80 per token to nearly $0. So that announced the collapse of the Terra ecosystem, right? The Terra demise event in May was the Lehman moment in crypto market. If you know the global financial crisis back in 2008, in October 2008, Lehman Brothers collapsed. It went bankruptcy, and that started the cascading effect in the financial market and triggering many potential huge collapse, including AIG and others, that lead to 6 months of significant decline in stock market and financial crisis, right? So this what happened very similarly in crypto markets. So in May, we had the Terra demise. Subsequent to that, the first collapse was the Three Arrows Capital, right? 3AC. So 3AC was one of the top 3 crypto biggest most impactful influential crypto hedge funds in the industry. At some point, they have asset under management over $10 billion. And they had a huge direct exposure to Luna token and UST, right? And when UST and Luna collapsed to zero, they had billions of dollars of losses. Later, people find out that they actually have been insolvent because most of the assets they have were borrowed loans from, say, Genesis, blockchain.com, Voyager, Celsius network. So 3AC realized they're insolvent. They filed bankruptcy, which led to the others, right, in big trouble, right? Genesis and blockchain.com didn't file bankruptcy later, but they had significant losses. And Voyager and Celsius network both filed bankruptcy at the end due to various reasons, but both of them were the centralized lending platform of crypto. And in addition to having loans to 3AC, which is the Voyager's case, right? Voyager has mismanagement of their loan. They lended out $606 million to 3AC, which is nearly half or more than 1/3 of the assets. Of course, if this biggest lender, right, biggest borrower defaulted and they have to file bankruptcy. Celsius Network had another serious mismanagement of the risk, including their exposures to the decentralized DeFi lending markets. So when all the tokens were plummeting and their holding became worthless, so they also paused withdrawal on the lending platform and later filed both of them Chapter 11 bankruptcy. So they're under debt restructuring. And all of this event has caused a cascading effect, right? The significant drop in crypto market prices, which caused a huge lending loss, trading losses in some of the lending platform exchanges. One of them, such as Babel Finance from Hong Kong, they also declared bankruptcy, and also the way they do it is to convert their debt into equity, right? During this whole events, actually, we had a white knight, right? The FTX, the billionaire founder, Sam, right? Bankman-Fried, was able to provide some liquidity to some lenders, but he was not able to rescue the entire market. So those are what happened in the last 3, 4, 5 months. This is all monumental events that has taken place in the crypto market. When we look back in those events, we realize it's all about risk management, right? Because the problem for most of the collapsing cases we talk about is from centralized counterparty mismanagement risk. Of course, in the Terra case, it's more like stablecoin, algorithm-based stablecoin is not really stable. When we have a bank run and your algorithm cannot restore the confidence, and everything collapses. But in other cases like 3AC, Voyager, Celsius, and Babel, it's all related to their management mishandling the risk. Contrast, if you look at the decentralized platforms or products, and most of them have worked well during the market turmoil and huge collapsing in prices because you have to put in the collateral in order to borrow money from those protocols, right? And also decentralized exchanges, the DEX, mostly are functioning well. But it doesn't mean DeFi doesn't have a problem, right? You can see from the chart that DeFi has again also dropped by 2/3 of their value locked. So how much money is in the DeFi protocols? It has dropped by more than 2/3 in the last 6 months, 9 months. And so the problem, the specific risk, the specific kind of risk for DeFi, I think are two, right? One is they have a concentrated protocols. So if the software has a bug, then hacker can spot the bug and exploit it after it's deployed. And also because DeFi is operated on transparency, open source code, so you know the formula. So people can use, the hackers can use flash loans to exploit the imbalance between the two assets in the protocol. And a third case that has happened recently is the front end of the protocol, like a website, right? The front end is the interaction between human wallets and the protocol has been hacked, which happened to curve protocol. Then, so when wallets are connected, they get stolen, the crypto gets stolen. The second type of DeFi risk, I think, is from regulation and compliance, right? So recently, there is another signature event, which is the US Treasury sanction of the Tornado Cash, right, for money laundering. And Tornado Cash is a DeFi protocol. Its algorithm is a protocol on the website, no human behind it to manage the transaction. But this protocol facilitate anonymous transaction by concealing the identifiers, by putting all different transactions together, mixing them together. You can see from this little chart, I apologize, it's kind of small, right? But this overall, the money laundering is probably 10–15% of all the transaction. However, because everything's mixed, they were sanctioned, so none of those transactions were allowed, right? So the US made it clear crypto decentralization is no defense from sanction. So now the US Treasury or the regulator can sanction the protocol with no human, right? Or you can be sanctioned or gone after if you are a software engineer written a piece of code, and that's also very new to the regulatory world, right? So we are watching this development of regulation compliance, and the general consensus is that the US government will not kill the crypto market. However, they will regulate the crypto market. They will bring them into compliance, bring them to the framework so that they can better protect investors. Okay, so in summary, blockchain technology, we believe, is a revolutionary technology that will bring revolution to our money, to the way we conduct financial transaction, to the way we structure firms, right? So there are many opportunities in the space, but there's a lot of risk as well, right? In particular, recently we experienced a huge market turmoil and collapse of several protocols or centralized platforms, in part because the mismanaged risk by human and also product risk in the DeFi algorithm. And in addition, the regulation compliance also brings a lot of scrutiny on many of those new innovation. By the end, we believe the opportunities are still there. We believe that orderly regulation will help promote healthy growth and investor protection. Okay. So I skip this. You can find resources online. And I'll move to our second speaker, Professor Aaron Kim. For 10 minutes, then we're going to move to sharing from our students in the lab. Go ahead, Aaron.
Okay, thank you. I'm sorry, I have some problem. Okay, so my name is Aaron Kim, and I'm associate professor in finance. And in these days, I'm studying the risk management and risk assessment of many assets, but it includes the crypto asset. So I've made a small, one-man company named Green Instrument, and I would like to show how can we analyze the risk based on the mathematical notions, mathematical theories, very briefly. So mathematics are a very good tool to see the chaos, to detect some extract the cosmos in chaos. So we have actually the cryptocurrency is also very chaotic data, and it has more risk than this stock or the other assets. Anyway, it has very high level of chaos are so mixtured in this the cryptocurrency data. So we need some more advanced mathematical models to detect some rules and some skeletons of this chaos. And then we make some good model to describe this chaos, and then use this model to detect the risk of this cryptocurrency. And then after we make this good mathematical model, then we can apply it to the risk management and decision-making, portfolio optimization, or derivative pricing, hedging. So that could be possible. So we are using very basic mathematical models, and then we make some time series model and many good tools to analyze the risk, and then apply it to the portfolio management and market or credit risk management, derivative pricing. And in these days, machine learning and ESG is also very hot topic, so we can apply. I would like to apply it to this field also, and then we can make our solution. Okay, so if you I've made many R packages, and actually I'm using the tempered stable model to detect this fat tails and skewness of this cryptocurrency or financial asset. So you can download this R package in this website, okay? And you can find some manuals for this package. So the empirical distribution of cryptocurrency always have some fat tails, so the blue curve. So that makes many troubles. But if we use the normal distribution, then it is not captured. But if we use the tempered stable model, which is implemented in this package, then we can detect these fat tails. And then using the fat tail and some the time series model, we can calculate the value risk, or some risk measures, the other risk measures, conditional value risk or something like that. And here is the Gaussian based risk model, and the blue is NTS based risk model. But this blue is better than green, because the cryptocurrency has more chaotic level than ordinary asset. So we must apply some fat tail distribution. But T distribution is also good, but it is not so good, not useful, because it is too much fat. So it is overestimate our risk. If we use the T distribution, then we cannot start the investing, because we cannot take the risk, because this risk level is so high. Anyway, so based on this one, we can forecast the future risk weather. And so we can forecast what will happen tomorrow and 2 days later, 3 days later, and so on. So that could be also measured based on the risk concept. Okay, and we can apply it to the portfolio optimization. So for example, if we already have some portfolio, then we change some weight of this portfolio small amount, and then change the portfolio. If we change too much amount of our portfolio, So then it makes some high transaction cost, and sometimes it gives some effect on this market slippage problem or bid-ask problem or something like that, liquidity problem. So that's why we just change a little amount of our portfolio and then so change it many times. So in this case, we can use this portfolio budgeting algorithm. And so that is what I'm doing in these days. And you can visit my Girin homepage. And so it is the Bitcoin today. So it is 5 minutes data of Bitcoin prices and risks. And it is 7 days forecasting for the risks of so Ethereum, or so for example Bitcoin, also Binance Coin. So it is very risky later. So and so it is the daily time series of our so Bitcoin, or so for example S&P 500 index, and some risks of the S&P 500 index are given in here. And so I can provide you some data in here, so risk weather data in here. So you can see some 5 minutes data and 5 minutes, so value list based on the 5 minutes data are accumulated in this database. So it is now running. So one of my server calculate every 5 minutes and so accumulate this risk measures every 5 minutes, and it is saved on this database. So if you're interested in this kind of research, then I will share this database together with you, and then you can see the high frequency risk management. How can you do the high frequency risk management with me? Okay, that's it. Thank you very much.
Thank you, Professor Kim. So I'm going to share this. So now I'm going to bring up our panelists. We have Anna, we have Eric, and Seth to join us. Okay. So maybe Anna will be late because of the interview. So we will start with Seth and Eric. So I'm going to ask you a few questions, then you can share whatever you feel like relevant, right? Maybe let's start with self-introduction about yourself and your journey related to blockchain crypto. How did you get to know blockchain crypto, and what have you been involved in this space, right? Then we will talk about opportunity jobs and things like that. We start with Seth. Seth, go ahead.
Sure. So my name is Seth Rosenthal. I'm in the business honors program here at Stony Brook. Professor Kim is one of my advisors for my thesis, so I've been working closely with him. My concentration is finance for the business department, and I have a minor in mathematics that I am also pursuing. I started to get involved in the cryptocurrency space when I was very young. So when I was about 14, 15 years old, I started looking at what is Bitcoin, what is Ethereum, how do they interact, how do they operate, are they investable, is there a future in this space, and what is this technology? At that time, I purchased I allocated some money towards both Ethereum and Bitcoin, and I've held those coins ever since, when it was a very early stage, very new technology. Now my research has been focusing on gray swan modeling financial crises, and kind of seeing what you can do to better prepare and better hedge and understand the risk in the space. Because as Professor Danling went into earlier, we've had several large-scale blow-ups in the space that have led to what are like modern-day bank runs, I'll say. Where people just trying to get out as fast as possible from a moving train and trying to sell all of these not so stable coins. I think that basically answers all those questions.
Thank you, Seth. Let's get to Eric. So Eric, can you turn on your mic and your video if you can? Maybe introduce to everybody what's your background and what's your journey to the blockchain crypto space? And Eric is an intern in our blockchain business lab.
Okay, hi guys, my name is Eric. I'm a MI student, graduated from Stony. I just graduated this year. So I actually really have some passion about the cryptocurrencies. I think maybe there are some bubbles in there, but I think the technique is mandatory, and I really like some about the quantitative. Actually doing a research about how to analyze the data from the Glassnode and other website. I think the crypto might be a very important future technique. So I think there are a lot of I need to learn, and all the things about crypto and the blockchain are just startup. I just start. So I think maybe if we can study it fast, we will learn something before others. And yeah, I actually also think that the quant is a very important techniques in the crypto and in the blockchain, because of course the blockchains, all the things are on the internet. So I think the analyzed things are very important too.
Okay.
Yeah.
Thank you, Eric. So you guys can see that we have a veteran here who is Seth, and then we have a rookie here who is Eric. But it doesn't matter how much experience you have, how much exposure you have. Our blockchain business lab welcomes all kinds of students, as long as you're interested to learn, right? Let's go to the second question. I'll first ask maybe Dr. Kim to share this, then we will go to Seth and Eric. So the second question is, what kind of opportunities for jobs and career or entrepreneurship that you have seen in the blockchain space in general? Dr. Kim, why don't you turn on your mic? Yes.
Okay, so first I made my own company to provide my software. Actually my market is Korea, so many Koreans are interested in this blockchain technology. And so actually my major is risk management. So Korean government always interested in the risk management. How can we control the risk of the cryptocurrency market? So the government always suggests that every cryptocurrency trading market should provide the investors how risky this cryptocurrency is. So they have to say that how risky this asset comparing with the stock or the other assets investment chance. So that's why regulator always ask this. What's this? Exchange market to provide this risk measure for each cryptocurrency. So then they would like to know how can they measure the risk and how can make this risk management as the system. So they have to make some software, and it should be linked together, and it should be run real time. So that has some business opportunity. So it is so if we have some good business with this crypto market, trading market, then this risk management part can have some remarkable amount of money. So that is what I'm doing in these days.
Right. So risk management, which applies to statistics, finance, and mathematics, computer science, regulation, right? And
yeah,
also,
regulator always eager to have
regulator law,
yes,
and the law. So it's really touches everything.
Yes. And so it is also welcomed by this the police because they always want to detect some fraud. So that's why they make the fraud detecting system based on the risk management.
Right. So that's computer science, cybersecurity, things like that, right? Mm-hmm. So I mentioned in my presentation that a lot of cyber attack, like bridge, right? Bridge is basically connecting two protocols so that the cryptos can be interoperable, right? From one chain to another. But the bridge tend to be the weakness of the ecosystem that tend to be attacked. And so if you know computer science, you know good at math, and how to protect those protocols from malicious attacking is also very important. A lot of software engineer, a lot of mathematicians are needed there, right? So let me turn the table to Seth. Seth, what do you see in general the interesting opportunities that yourself have found?
So going off of what you guys said, I know a few people have been hired by the FBI, by the CIA, and by other government agencies for their abilities to track cryptocurrencies, because many criminals wrongly believe that it's like this anonymous form of payments, but there are many ways to track these payments, and there is ever-growing opportunity in those areas as well. And you just need, as mentioned before, like a comp sci degree, a math degree, and the ability to want to work for a government and pass background checks. And then from there, once you start to get credibility, you can often pivot into the private sector, which is really how you can build wealth for yourself and start investing in some of these cryptocurrencies. Because although it may seem like 10 or 15 years of Bitcoin has been in existence in Ethereum, there are consistently new projects, new problems to solve, and new iterations and new ways to do this. There's proof of stake, proof of work. No one even knows if either of those are actually meaningful, or if there's a third or fourth system that needs to be invented that is actually superior to all of those. So if you can think and you can analyze these different systems and understand on a very deep level how they work and how these coins operate and what objectives these companies can accomplish, you can then move into like venture capital and start backing founders who are going to make their own coins. On the other side, you can trade this information. There are many new hedge funds that are starting up in the crypto space that are interested in very low risk trades, and a low risk trade often is, how do I want to say this? It is indifferent to market movements. So they don't really care about they don't really make a directional bet on a market. They are more trying to use the cryptocurrencies and their functions to generate a stream of revenue from that market for their investors. So you can work as a trader at some of these hedge funds. Some of them have traditional aspects like mean reversion and stat arbitrage. Others have more fundamental attribution, some newer technologies like yield farming. And the interesting thing about trading is there's consistently new ways to trade. As long as you can think of a new way to do something, and as long as you have the capacity to think in a different way than other people, you can always make money in a market. And if you can, of course, generate a positive P&L, then you basically have job security, because no one will want to fire you because you can make a P&L and you can make money for the firm. So those are some opportunities that I see.
Thank you, Seth. Before I jump to Eric, I want to encourage everybody to put in your questions in the chat box, because after Eric and myself, and we will end this discussion, we'll go to the Q&A session. So you can put in your question right now, so we can get to those questions as soon as we can. So let's move to Eric. So what kind of opportunities that's most attractive to yourself and people you know?
I think about the blockchain and cryptocurrency, I think the most important part is that I think blockchain market can do something that we can't do before. Like we all know, blockchain, all the data in blockchain is all transparent. That is impossible to make happen in the traditional market. And you can see all the data. And also, there is a very interesting part is that, so we all know before some very important information came up from some companies or from SEC, the market, the stock will flow very, the market will get affected. But from the crypto and the blockchain, it might be very different. And also some very important, very interesting thing that we can do in the traditional market, it might be possible to become true in the blockchain. So I think blockchain market might become a better market, a more mature market than before. Yeah, I think that's the most part attract me.
Okay, thank you, Eric. So everybody was sharing about they see the opportunities in computer science and math and stats and finance. And I want to share some other perspective. I really think this ecosystem, when it grows, it needs talents from every corner, every kind of talents. For instance, actually myself, actually the need for journalists, people who writes about cryptos, the market reporting, what's going on in this ecosystem, right? And you see tremendous growth in media and also conferences organizers, right? And articles reporting, and actually entrepreneurs who writing their Substack, right? About crypto, DeFi, in words, not in math. And they grow tremendously in terms of their following, in terms of how they can leverage their following to generate income for themselves. And so we need a lot of journalists, right? And we could have our business student become the journalist, and we can have a journalism school student doing this. And there's tremendous needs. I also see a tremendous need for analysts, crypto analysts, right? People who can actually understand the protocol and writing report that's understood by normal people who is not so tech savvy. So some translator that's between the algorithm, the computer code, the math, and translate that to normal people, ordinary people who's not so tech and math savvy, right? And that's number two. Number three, I see a tremendous need for law, for lawyers, for compliance. And actually, if you guys know about Aave, right? Aave is one of the largest decentralized DeFi protocols, and their founder is a lawyer, right? And so it doesn't mean you have to be a computer mathematician in order to found a crypto company. And Aave is one of the largest in the whole ecosystem, whole globe, right? And the founder is a lawyer, right? So, it needs more than finance, math, computer science, engineering people. It needs everyone. In addition, the artist, right? We haven't got time to talk about NFT, which we did in the previous workshop. If you go to our YouTube channel, you have those workshops about NFT. NFT is basically gave artists the power to harness their intellectual property and also to monetize their work, right, in digital form. So artists, musicians now putting their work in NFT format and auction them online, so they do not need a financial intermediary taking 50% of the cut. And so you can see that unleash a ton of talents and huge markets. And people talk about last year, what's most expensive on crypto market is monkeys, right? If you don't know what's monkeys, it's actually a collection of NFTs that features the apes, the bored apes collection. So in general, what you see from our conversations, talents from every corner can be needed and demanded to find their space in blockchain ecosystem. So you just need to start learning, have exposure, and so learn from our website and learn from different podcasts we have on our website and go from there. Okay, thank you very much. I'm gonna stop recording and go to the Q&A.